Progress, you're all set.
Good morning. I would like to call to order the Broome County Industrial Development Agency and Broome County Local Development Corporation Combination Audit and Finance Committee meeting. The first item on the agenda is to accept the minutes of the November 29th, 2023 Audit and Finance Committee meeting. The minutes were sent out to the committee members and any recommendations were sent. And so we would like to submit those for the record. Next is the public comment session of the committee meeting. If anyone wishes to address the committee, please state your name and limit your comments to 5 minutes. Hearing none, seeing none, we'll move to the first order of new business. Number 4, a review and discussion recommendation of the 2023 audit of the Broome County Industrial Development Agency and the Broome County Local Development Corporation conducted by Insero and Company, CPAS LLP. Stacy, please.
Yes, so as you know, as a requirement of public authorities, by the Public Authorities Office of New York State, we are required to have complete and approved by the board our fiscal year audit for 2023 in this situation. Once again, we've had the great pleasure to work with Insero, who will be presenting that just in a few moments for both the IDA and the Local Development Corporation. I wanted to thank all of the staff for their time and attention to this, especially Gina Paw, who did a great job on this. Meanwhile, dealing with a broken ankle and doing this remotely. So she had a lot of challenges, but I want to thank her for her hard work on this. So with that, I will turn it over to Evan and or Rita. I think Evan, we're going to start with you.
Yep.
Okay.
Thank you all very much for having us here this morning now. I'm Evan Cleveland, audit partner with Insero and Company CPAs, here to present the results of the 2023 audit. I'm going to work mostly off of the executive summaries, try to talk about the top documents, and then we're in the IDA then. On the first page of the executive summary, we're issuing a modified opinion on the financial statements. So that's otherwise known as a clean opinion. Best opinion you can get, means your assets, liabilities, net assets, or net position, revenues and expenses are all fairly stated in all material respects. We also perform an audit under government auditing standards, and that report has also an unmodified opinion and no instances of internal control weaknesses or anything to communicate associated with that part of the audit. We also issue a management comment letter that is mostly boilerplate language, just describes and defines deficiencies in internal controls, and we have nothing to report in that letter. So the next page, we're required to communicate to those charged with governance at the planning stages and the conclusion of the audit. And these are the certain things that we're required to communicate. We do so through a specific letter that I won't go to. We have no comments of concern associated with anything listed here. The only thing that I'll point out is qualitative aspects of accounting practices. The IDA adopted ASB 96, it was subscription-based information technology arrangements. That was a new one this year. It had no effect on the financial statements. And then I will turn it over to you for many pages.
Thank you. On page 4, we have just a pie chart of the revenues for the IDA, so you can see it year to year. The biggest change you'll see is in 2022, your fee income was 81%, and in 2023, it was 43%. So there were changes during the year. Can you speak to that? So that really is related to the fees, especially the Spark JC fees and Canopy.
Yeah, so we restated the 2022 balances based on, there was a payment plan associated with Spark JC LLC. So that got pulled back into 2022, and that was a little over $1 million. And then during the year, the payments for Canopy growth, so there was one large one for $393,900, and that was pulled out of the receivable. So it was recorded in revenue initially, but needed to be applied against the receivable. So revenue was recognized back in 2019 or 18.
Mhm.
So it's a timing issue?
Yeah,
They're always big on timing, you know.
Yeah.
that. Drives you crazy.
On page 5, you have the pie charts of the expenses. Not too many big changes. I mean, your salaries and benefits did decrease from last year. Other expenses kind of increased. The biggest is there is the bad debt expense in 2023 related to the loans that are expected to be written off in 2024.
Is this the first time we've done it? I didn't see it in the previous years, right?
The bad debt
Yeah.
expense, correct?
yeah. So there were
Every year.
4 loans that have been outstanding and aging for years, and we ask
Okay.
about it every year. And this was finally, yeah, we're gonna write it off in
Okay.
24, so we establish the allowance in 23.
And those were mostly associated with our emergency loan programs that were provided during COVID. So I guess I'd say we knew there was some inherent risk with many of them. There were only a few that, of all, I think we ended up doing 10 to 12 loans and only
20.
Did we do 20?
21, actually.
Okay, I stand correct. So overall, a good program, but we did have a few that just weren't able to pay us back.
So on page 6, we take a look at the assets and liabilities. It is the top, the assets are very small, sorry, but we look at 5 years worth. But from 22 to 23, your assets did decrease about 691,000 or 2.8%. And that's really due to the payments that you received based on the amortization schedules for the loans and notes receivable, offset by the increase in accounts receivable. Your total liabilities increased about 196,000 or 67%, and that's really due to the increase in accounts payable based on timing of when invoices are received and paid during the year. On page 7, takes a look at your net position. So total net position decreased approximately 887,000. That's really based on the operations during the year, the adjustments we had to do for the revenues.
The canopy payment, the bad debt, yeah.
On page 8, we take a look at the revenues. So your total revenues decreased about $260,000 or just over 18.5%. And that's due to significant changes in the fee income, as we had stated, for projects being closed, but it's offset by the increases in investment income. So last year there was an investment loss. You have the investment income this year, and you have a gain on sale of assets compared to historically a loss on sale of assets. Page 9 takes a look at the expenses. Your expenses increased $591,000 or just over 41%. And again, that's really due to that significant increase in the bad debt expense of the $288,000 and increases in the capital expenditures for ongoing project work during the year.
It's mostly related to our efforts with the potential development park.
And page 10 goes over, as Evan had mentioned, the agency implemented GASB 96 during the year. There was no material effect on the statements. And the future accounting standard that's upcoming is GASB statement number 101, compensated absences, is effective for the year ending December 31st, 2024.
Any questions on the audit results or any of the numbers before we jump into the main financial report and take a look at a few of them?
I'm not sure if it's now or later, but just if you could elaborate on that restatement.
Sure, so there was a payment plan that was entered into with Start GC LLC, and we pulled $954,000 into 2022 based on the payment plan, so the entirety of the fee was a little over $1 million, and they pay a specific amount annually. So you earn the funds in 22, therefore we established the receivable and recognize all the revenue in 22.
This is related to Oakdale Commons, so
Got it.
larger fees, we have occasionally spread out.
So we were previously accounting for it as more like an installment payment.
Yeah,
Thank you.
so within the main financial report, I was going to turn to view the footnotes, and I'm gonna skip way ahead to page 13. It's a little over halfway through. So note 5 of the top details your loans receivable. Within the steed loans, you see the allowance for uncollectible. So that was the establishment of the allowance for all these uncollectible loans for 288,000. So you establish the allowance this year and then you write them off next year. So we've already affected the financial statements with expenses during 2023. Note 7 is the notes receivable. So the second item, Spark JC LLC, this is the installment payment plan where you earned all the revenue in 22. So it's between $100,000 to $54,000 annually through 2033, and that balance was $954,000 at the end of December 23. Page 15. Details you on capital assets. So you had about $6.5 million invested in capital assets at the end of 23, added 21,000 in capital additions and depreciated items, 145,000. So a net reduction of 124,000 during 2023. And the next page, note 13, has a bunch of things that are highlighted. So we're still waiting on a few things associated with the pilots and employment information. It's really how it goes historically for all of the IDAs we work with. A lot of businesses and individuals do take a long time to respond. And it is very challenging for the management team here to get them to respond. And I know certain measures have been taken this year to
We are assessing,
incentivize.
we are assessing
quick
fees,
response.
And they're working.
Good.
and they're working, but still some outstanding.
And then note 15 at the bottom, this was the restatement. So the beginning balance last year that we reported was 23.6 million, and then we brought in almost $1 million through the receivable and revenue to begin the year at 24.6 million. That's all I plan on covering in financial report associated with the IDA. If anyone has any other questions associated with the main financial report or anything else. Right. Yeah.
Station the map. Goes to the full board.
Some,
Second. All in favor?
Aye.
Opposed, motion carried. Item number 5, review, discussion, recommendation of,
We need to go through the LDC.
oh, I'm sorry.
That's okay. But we can just, we've done the IDA, we can have you go right into the LDC now.
Perfect.
That's okay. All set, yeah, all set.
So, I'm working on the executive summary for the local development corp, but it's exactly the same, except it says LDC on it. So I'm on, the second page of the executive summary. So we are also issuing our modified opinion on the local development corporation's financial statements, so that's also a plain opinion. We perform the audit under government auditing standards for the LDC as well. Also an unmodified opinion, no control deficiencies or material weaknesses to note within that letter. Because the LDC expends over $750,000 in federal awards, we perform a single audit and issue a report on internal control for each major federal program with accordance with uniform guidance. That's also an unmodified opinion. We had no issues associated with the federal program we tested, which was the state and local fiscal recovery funds. Those are the funds that are passed through the county to local development corp, and that was 8.1 million of the 8.7 million that we tested. And then the next page, because this won't fit on previous one, a management comment letter that has no comments. IDA. Similar to the IDA, we're required to communicate certain things to those charged with governance at the conclusion of audit, and we also have no comments of concern regarding this audit either. Also, this entity adopted GASB 96 as well, and that had no effect on the local development board. And I will turn this one over to Rita.
So on page 5, again, we have the pie charts for the revenue. They look very similar. Most of the revenue is the governmental grant, which is mainly the ARPA or the state and local fiscal recovery funds. Page 6 takes a look at the expenses. Again, there's not much change in the expenses from year to year. There's some changes in the administrative in general, but the majority of it is the grant expense. So if we take a look at page 7, which is your assets and liabilities over 5 years. So the total assets at the top of the page, they decreased $3.9 million or roughly 60%. And that's really due to the spending down of the state and local fiscal recovery funds that you received from the county in 2022 that was sitting there. The bottom, the total liabilities decreased about 4 million. That's again due to the spending down in recognition of the COVID funds during the year. Page 8 takes a look at the net position. Your total net position increased about $25,000. It's really due to the result of operations and everything during the year. Page 9 takes a look at the revenue. So your total revenues increased about $2.5 million or 39%. And that's again due to the recognition of those ARPA monies during the year for the governmental grants. On page 10, you take a look at the expenses. Your expenses increased again $2.5 million as a result of the state and local fiscal recovery monies being spent during the year. And then just on page 11, same as the IDA, the corporation adopted 96 and GASB statement 101 is effective for the year ending December 2024. Any questions on the LDC numbers?
So I was gonna jump into a couple of disclosures for the local development board. And I'm going to page 10 of the financial report. And direct your attention to note 5.
I'm sorry, Evan, what page?
On
did you
page
say?
10.
10,
5.
thank you.
Yep. So this details the related party transactions between the IDA and the local development corp. So the IDA doesn't have any payroll and the local development corp has no payroll. And the IDA spends time on behalf of this entity, so recognizes in-kind revenue and expense based on time and effort provided to us, so the $121,000 this year. And then the final paragraph is the activity associated with state and local fiscal recovery fund. So we received 10.6 million, earned and expended 8.7 million, and ended the year with 1.8 million left in unearned revenue. And then I was going to go to page 17, which is the schedule of expenditures of federal awards. So this details the federal funds that flow through the entity. 8.1 million was for the coronavirus and fiscal recovery fund, and then 650,000 associated with the community development block grants. Those are the two that are passed through the county. Totaling 8.7 million and so on. And the final page is the schedule of findings and question costs. This is basically a snapshot of the audit results, a lot like our executive summary. It documents on modified spendings and no findings associated with the audit. Details the program that we tested way at the bottom. And then has no findings associated with financial statements or the single audit.
Why is this considered a no risk or not a low risk?
So an entity can be low risk when they submit 2 years in succession of single audits. So this is year 2 of single audits, and next year you will be considered low risk.
But you have to be submitted timely.
Yeah.
As well.
Yeah, last year wasn't.
So next,
That's what
the
the unique identifying number that took the state and that.
There was a delay in getting our.
Provide to you guys.
Yep, not by us.
Well, we're gonna test the stamp with the fiscal recovery fund next year. Doesn't matter. It affects how much us as auditors need to test. So if you're not low risk, we are required to test 40% of your total federal awards. Whereas if you're low risk, we are only required to test 20%. You have just one massive program, so we're gonna pick that anyway. So overall, the audits went very well. We really appreciate all the efforts of Gina, Natalie, and Stacy. While we're out here, we asked for a ton of things, and we were able to present 2 unmodified opinions, which is great. And no findings.
Thank you.
thank you guys so much.
Wow. So I guess we should, look for a motion to move this to the board for recommendation to approve.
So moved.
Okay.
Second.
All in favor?
Aye.
Vincent. Motion carried. Now, number 5, review, discussion, recommendation of the readoption of the agency's investment and deposit policy, internal controls and financial accountability policy, the purchasing policy, the property acquisition guidelines, and the property disposition guidelines with no changes. I think that's Natalie on it. Natalie, please.
Thank you, Dan. This is an annual requirement of the authority's budget office, that the agency review its financial policies every year. Either modify those policies or recommend that they be reapproved for the following year as is. The staff reviewed the mentioned policies and recommend that they be accepted with no changes.
Look for a motion to, a recommendation to move to the full board. Second,
Second.
all in favor?
Aye.
Opposed, carried. Number 6, review, discussion, recommendation authorizing the executive director to request American Rescue Plan funds in the amount of $500,000 from Broome County for the purpose of supporting small business development to advance the interest of the citizens of Broome County. Stacy,
Thank
please.
you, Chairman. This is a nice, new partnership. I should say continued partnership with Broome County. As you know, one of our strategic objectives of the organization is to continue to strengthen our capacity to provide funding into the community, given the significant amount of restrictions on our own funds. We are thrilled again to introduce to the board a grant program in partnership with Broome County. My thanks to County Executive Jason Garner, Chairman Dan Reynolds, and members of the legislature for continuing to put these opportunities and their trust in us to be good stewards of the funding. So this proposes using $500,000 of funding from Broome County for the creation. We're still working on some of the guidelines on the name of this. Right now, we're thinking of something called the Rural Development Grant Fund. However, it would be countywide. The purpose of this would be to provide one-time grants for up to $50,000 to help small businesses with operational and other eligible costs. The RDGF, as we're potentially calling it now, the grant will prioritize businesses that are in, outside of our urban core communities, although they would not be precluded from applying, but it would give preference to communities outside of the main urban core. It will also prioritize businesses that employ low to moderate persons, minority and women-owned business enterprises, veteran-owned businesses, and businesses located within low-income rural communities. Our goal would be to work with small businesses in Broome County with 25 or fewer employees. We are looking at uses that would include grants to support real estate improvements, purchases of machinery and equipment that allow their business to retain employment or grow employment in our community. We're still looking at other potential uses of grant funds. So once we finalize, we're just finalizing this with the county. Once we have the final set of guidelines, we'll get those out to the board. I would say they're near completion. The purpose of today, however, is that the board would need to accept the funds so that we can finalize the grant program guidelines.
No, the county already voted on this,
It
right?
did, yes. You should have a copy of the resolution in your packet.
Thank you, Stacy. Seeing no other questions? We'll look for a motion for a recommendation for approval to the full board.
I'd like to move it.
Second, thank you. All in favor? Opposed? Motion carried.
I want to make a
Oh,
note.
sorry.
I just want to make a note for the record that this is a joint meeting, audit and finance of both the IDA and the LDC. For the purposes of the audit, it's also for the purposes of this grant program would be run through the LDC. So this will come on the LDC's agenda, not the IDA's.
Thank you. Seeing no old business, there is a motion for adjournment is in order.
Okay.
Carried. We are adjourned.
All right, couple minutes to spare.